Yes, guys, this is Romeo back at it again. Welcome to Forex. This is Forex, guys, with Romeo. Just going through a couple of things with candlesticks and yeah, this candlesticks, understanding candlesticks. Let's say when you see this doji candles. The dojis, this is the dojis, guys. If you want to see the dojis, that's the dojis. And they say they apply doji candlesticks. A good trick is to look out of the doji rear edge of the price channel. If a doji appears to the top of the channel, it would indicate a bearish correction. But I understood that doji is where the price is having indecision, the market. Okay, I don't have a place to show, guys, but it says here it shows applying doji candlesticks a good trick. No, that's not that. Congestion where indicators signals a change of market condition direction. But I understood the doji is where the market shows indecision. I don't get it where I read that, guys, but I think I've read indecision somewhere. Yep, there is it. Market and cool congestion. Congestion is like where you don't want to be in the consolidation. They say congestion, others says consolidation. So yeah, just going through a little more, guys. Going through a little more. Just learning some basics with forex and the market. There is a marubozu. Don't learn too much, otherwise you'll confuse yourself in the market. There is too much to learn. There's harami, bullish harami in Gulf, whatever they might be. I'll be blunt with you. Harami doesn't always live up to its hype. While it is sorted as a reversal indicator, you might find yourself disappointed by its reliability. So this sometimes the Harami, guys, is not a thing that you can rely only on, because the psychology behind the Harami is that it's a possible change is in its sentiment may be happening. The smaller candlestick does not necessarily mean a strong reversal is coming. Often with a Harami pattern reversals, they are tight range trading referred to as a congestion. This is the consolidation. For others, is congestion, guys. Will follow a Harami on its own. Says the chart might reverse. It is best to look for confirmations and to combine the Harami with other longer term patterns. So Harami on its own is not sometimes effective. Be aware of Harami and watch for what they are telling you about the market sentiment, but do not have a blind faith in them. Don't have blind faith on just because you saw a Rami and then you start entering trades. Look for other confirmations. That's what they're trying to say. Yeah, this is the Haram bullish, the Hangman bearish. Okay, it is one of the best known reversal indicator. Okay, that's what we are hearing, guys. It's one of the best. It's a candlestick pattern that consists of just one candlestick, although the candlestick is always best. It's always best to view them in context of their candlestick around them. of the candlesticks around them, in particular the candle that follows immediately after this one. Then you can enter trades, or you can yeah. The hammer or hanging man candlestick has a long lower wick, short body, and a little or no upper wick. Strictly speaking, the lower wick should be at the least 2 longer than the body, and the longer, guys, near that's what it shows. And it's try to show the reversal there on the charts. Try to put it back in the charts, and that's what it looks like. Yeah, the hanging man, that's what it looks like. So I'm not going into detail. The inverted hammer, or the bullish shooting star, bearish, that's what it looks like. Engulfing bullish, you can post, you can stop the video, and guys, and do some understanding in it. So this is just the morning star, evening star, bullish. This is for the bullish. The morning star. I'm just gonna read this part. As you can see, we have a strong upward candle in the direction of the trend, followed by a gap up to the small candle showing indecisions. The next candle moving strongly downward confirms the morning star signal, and trade who spotted this evening star reversal signal will have enjoyed a big downward move. So this is the morning star. If you have, but you will wait for signals to show after that if it's really a morning star, or is it really, yeah. So that's it. So I've seen people trade this way, putting their trend line at the resistance and putting their at the major resistance point, and where they can, yep, that's one. I've tried it myself. The 3 white soldiers on the bearish, in the bullish, okay, and the black 3 crow, 3 long red or black candlestick, which lowercase appears within a upward trend shows 3. Okay, that's how this spot. Just going through some, and 8 minutes, guys, 10 minutes, then we sorted with this one. 10 minutes, then we call it a day with forex, guys. Forex with Romeo, and we call it a day for this chart. So we're just gonna take 1, 2, let's say less than 1.5 minutes. So we're just checking the 3 long red black candlesticks with lowercase appears within an upward trend. In the case of a rising triangle, this is what it is. Low upwards selling action with stronger suggests that more selling is imminent. And as we see price condition continuing downward through long-term support, nice. So this is a long-term support. It's just support. When it comes to that place, it still supports, goes, supports, piercing line, and that's how we call it a day. History of candlesticks. That's how we call it a day with Forex with Romeo. Welcome to Forex with Romeo, and Shalom.